Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village. It is nice and cloudy out there, and today we're going to talk about why you should be prepared for downside and why you should be prepared for upside price action. And is sell in May, go away the thing? I'm so sick of hearing that, so we're not going to even talk about that. We're going to just straight up follow up on our previous videos and our outlook. Look, it's really hard to be bearish right now, especially when everybody out there, Token 24, all these guys, Arthur Hayes saying Bitcoin's gonna hit 250,000. But I do want to stick with my bias here that, look, we were expecting price to come up and hit that 618 fib at 96,500. And to get a rejection, we've got a rejection thus far. And, well, simply by ticking below last week's low, very likely going to get that move back down to about 90,000. And let's see what volatility says on our other chart. On our primary chart, which has the 55 moving average, which, you know, we're expecting a bounce off of this on the first pass, especially if volatility was low. Needless to say, we are coming up into that golden pocket. Could we swipe the upside one more time? Yes. 98,000, 99,000, I think, you know, could still definitely be in the cards, especially if the Fed tomorrow comes out and says we're going to lower interest rates. Let's take a look at that really quick. The Fed CME watch tool, which actually forecasts whether or not they are going to have a rate cut. And I think, if I'm not mistaken, there was about a 3% chance that they're going to lower interest rates. We'll take a look at gold too here in a second, because gold is what I think is putting in what I think would be a double top. Yeah, 3% chance that they're going to cut interest rates by 0.25%, 96% chance that they're going to keep things the same. And, you know, again, with the stock market rallying off the lows, and again, stock market coming into the golden pocket where exactly where you'd expect the rejection. Maybe we get a push up to the 21,000. I think that would correlate with Bitcoin heading up to about 99, 100,000 and put in a massive rejection there. But thus far, I don't believe we have enough pain in the market. Why? The Fed hasn't pivoted yet. They haven't started lowering interest rates. What's going to get them to lower interest rates? Well, it's another swipe down to the lows. We can see the NASDAQ down at 16,000 easily, in my opinion, and that would correlate with Bitcoin having that swipe of the lows one more time. Again, I'm going to have that bearish bias that things do put in at least a short-term reversal from here back to about somewhere around $90,000, and then we're going to kind of judge it from there. Easy way to tell if this thing is going to be a confirmed bull trap would be a closer back below 88,000. That is the 382 fib. That's how a bull trap works. Essentially gets everybody bullish into the golden pocket, and then by closing back below there, making a lower high, that's where, you know, you could see some much lower prices. And right now, the pivot that I'd be looking, you know, for pricing to hold up here, as long as we're closing dailies above this, you know, the bottom side of this. Let's take a look on the 4 hour if it's a little more apparent here. But, you know, 4 hours above 93,685. If we do get a closure below there, looking for a quick move down to 92.3, and that is the pivot. That 50% retracement. If we lose that level, then it's down to doggy town. 88,000 is in the cards. That's just my opinion. Now, what would be the reversal of that would be, hey, look, we come up here, smack that 786 fib, put in a higher low, and then I'd be looking for new all-time highs. So, you know, this is a key critical pivot right here. I'd really say right here, as long as we're below that 618 fib, if we can close a daily back above 96.5, I'd be definitely more bullishly biased, at least in the short term. But again, I think the most likely thing is that we do come down and we take a swipe at that, you know, and that's why I haven't been making too much videos here, because look, we got the bounce, but we've been saying all along, likely for Bitcoin to come in between 72 and 62,000, which is going to be that golden pocket. And it's just not, in my opinion, it's not going to be hard for these market makers, these big players, to move price down and get their real buy orders filled in this zone. And then we play out what's likely to happen in the long term, which again, you know, if you've been following our channel for some time, what we do is we mark out what exactly is the bull market. The bull market starts 12 months before the halving. The lows get put in. People buy into the halving narrative. Oh, the halving is coming. And boom, the halving happens. You get a consolidation and then your big markup. And from high to low in this first bull market, we're talking 111 weeks. From high to low in the second bull market, we're talking about 139, call it 137 weeks. And the third, we're talking 133 weeks. And so the bull market, you know, where do we expect this thing to run up to? Well, 130 weeks puts you somewhere between December and October, the last quarter of this year. Let's just call it October to December. Likely those highs get put in, and that is right in the 133 week mark for the bull market. Actually 133. So, I mean, we could be anywhere from, you know, last quarter to first quarter of next year. Again, technical analysis is not an exact science. It's more of an art form. And again, coming into this trend line would make a lot of sense. Why? Because, well, this is the weekly trend line, and we have not tapped it for some time, for a very long time. And so just by ticking below last week's low, I'd expect a quick move down to 90,000 bucks, 9,300, and then a bounce. And, you know, price is not moving a straight line, obviously. And that's why, yeah, this is just the broader perspective. It's hard to come out and say this and say, look, it's not going to rally and make new all-time highs. Again, I don't believe there's been enough pain in the stock market. Why? Because the Fed has not lowered the interest rates. And if we look at the future forecasting for this thing, June, we got a 30% chance of a rate hike or rate cut. July, 50% chance. And again, 50% chance. So that rate hike coming in over the summer, maybe September, kicks off the bull run. You know, I've been saying it all year long, right? For Bitcoin to really make new all-time highs, and it can happen quickly, we need the Fed to pivot. And once they pivot, meaning they lower interest rates and start printing money, stop the quantitative tightening, start the quantitative easing, that's when we can expect the bull market to continue. And the chance, and Arthur Hayes, 250,000, which I really respect this guy. I think he was saying at token 29 in Dubai here this past week that he thinks Bitcoin's going to hit 240,000. Well, where is that? What does that line up with? Well, if you take that Fibonacci retracement from the high to the low, your parabolic blow off top target, I might want to, wow, I think it's a little bit higher. I think that's a little bit higher. Where did we get that target here? There we go, high to low. Boom. That's what gets you up into that zone. And if you use the wicks, there we go, from the macro to the high, high to the low, that's your 4236 fib coming in at 241,000, right up with Arthur Hayes' target. So what do you know? We've been talking about it since way back here, and that would be very nice if the market could do that for us. We're going to be watching every step of the way as Bitcoin does its thing. So make sure you like and subscribe to the channel and get all the updates, and check out our links in the description below. Right now, we do have BloFin, a partnership. Right now, you get 10% cash back on your deposits. So make sure you check that out. I wish you guys all a blessed and highly favored day, and I will see you in the next one. Take care.